Hello everyone, it's Filmon here, and today I'm excited to chat with you about what's in store for us in 2024, particularly in the world of investments. This past year has been quite a ride. One example being the S&P 500 surging like 22%, even in the face of central banks raising rates. 2024, though, we're starting to see a shift. And when we look back at 2023, it was really rewarding, but 2024 is really starting to gear up for something really special. The last 2 years, we've seen interest rates climb. They've peaked in 2023, but now we're looking forward and we're starting to see that the rates that they have been increasing as aggressively as they've started to slow down to the point where they've stopped. And now financial experts are coming in and saying, you know what, there's going to be a U-turn with these rates. Now they're starting to see rates starting to drop. And now we're going to even see, or what they're anticipating is that rates will drop 3 times in the next 12 months. I want to share a clip with you with Jerome Powell, who's the chair of the Federal Reserve, and his impression of where the economy is now. And he kind of hints about what is going to be going on with interest rates. Take a look.
Steve Leisman, CNBC. Happy holidays, Mr. Chairman. Fed Governor Chris Waller said that if inflation continues to fall, then the Fed in the next several months could be cutting interest rates. I wonder if you could comment on whether you agree with Fed Governor Waller on that the Fed would become more restrictive if it didn't cut rates if inflation fell. Thank you, sir.
So, of course, I don't comment on any other officials, even those who work at the Fed. But I'll try to answer your question more broadly. So the way we're looking at it is really this. When we started out, right, we said the first question is how fast to move, and we moved very fast. The second question is really how high to raise the policy rate, and that's really the question that we're still on here. We're very focused on that. As I mentioned, people generally think that we're at or near that. And think it's not likely that we will hike, although they don't take that possibility off the table. So that's when you get to that question, and that's your answer. There's a naturally it begins to be the next question, which is when it will become appropriate to begin dialing back the amount of policy restraint that's in place. So that's really the next question, and that's what people are thinking about and talking about. And I would just say this. We are seeing, strong growth that appears to be moderating. We're seeing a labor market that is coming back into balance by so many measures, and we're seeing inflation making real progress. These are the things we've been wanting to see.
In this clip, you can see Jerome Powell and the Federal Reserve's feelings towards lowering interest rates. This is partly due to the upcoming renewal on mortgages. You can see how much of a challenge this can impose on homeowners, especially with the ones that entered the market during the pandemic's inflated prices on real estate. This is the central bank's wrong idea about a recession in 2023 and why adjusting rates are so necessary.
I'm curious if you're looking back on the past year, you talked about navigating by the stars under cloudy skies. Can you talk about some of the ways in which the economy surprised you most this year, where you thought it would behave in one way and had to pivot to respond? Thanks.
So I think forecasters generally, if you go back a year, were very broadly forecasting a recession for this year, for 2023. And not only did that not happen, that includes Fed forecasters and really essentially all forecasters. A very high proportion of forecasters were expecting very weak growth or a recession. Not only did that not happen, we actually had a very strong year. And that was a combination of strong demand, but also real gains on the supply side. So this was the year when labor force participation picked up, where immigration picked up, where the distortions to supply and demand from the pandemic, the shortages and the bottlenecks, really began to unwind. So we had significant supply side gains with strong demand, and we got what looks like a 2.5% plus, or a little more than that, growth year at a time when potential growth this year might even have been higher than that, just because of the healing on the supply side. So that was a surprise to just about everybody.
Given this context, the Federal Reserve and the rest of the central banks are finding themselves in a situation where they have to take an opposite approach, and that's to drop rates as quickly as they can. Well, That being said, I mean, what's the silver lining as an investor? Well, if rates drop, that's like throwing fuel on a financial market that's already red hot, which supports the thesis of a really strong 2024 year. Take a look at the historical data showing bull and bear runs in the stock market over the last century. It tells us that the shortest bull run has just been over 2 years. We're currently in the 13th month of a bull run, theoretically suggesting at least another year of potential growth. Past data even hints that the possibility of a double-digit gain in 2024 is very possible. I want to share one last clip with you from a guest on CNBC by the name of Tom Lee. He discusses his points on where he believes 2024 is going. And the reason I believe his opinion matters is because at the beginning of 23, he believed that there wasn't going to be a recession, we were going to have strong growth, and that we were going to start seeing interest rate drop. So please take a listen to what he has to say, and I'll talk to you soon.
Funstrat Global Advisors co-founder and head of research, Tom Lee. Welcome.
Happy New Year, everybody.
So everybody was negative this time last year, but you were not. Why?
Yes. Well, it's really two things. One, we thought inflation would fall like a rock, whereas many were bracing for a decade of sticky Fed fighting inflation. And the second was, if that was true, that we would avoid a hard landing, and soft landing was the most probable outcome. So that's pretty stock friendly, right? Inflation falls like a rock, you avoid a hard landing, and markets were down 20% the year before.
So in 2024, will inflation keep falling like a rock, and will we still have a soft landing?
Yeah, I think your food chart is spot on. I think consumers will realize that the rate of price increases is slowing. We saw it in the UMich surveys. That will give Fed a lot of leeway to cut rates next year to keep real rates constant. Housing and autos is really 70% of inflation. So both are going to normalize, and that means 2% is going to be very visible next year. And I think it's a huge relief for equity markets when that happens.
I truly believe that 2024 is going to be a great year in terms of the financial markets. That being said, RSP season is here. And if you're planning on making a contribution, please, please, please don't wait last minute. The deadline for this year is February 29, 2024. So either Claire or myself will be in touch with you before that deadline happens. In the meantime, thanks and have a great 2024.